So, when I say the name Warren Buffett, the Oracle of Omaha, what's the first thing that pops into your head? For a lot of people, it's that he's the world's greatest stock picker, right? A genius who just has this sixth sense for which stocks are about to take off. But you know that picture? It kind of misses the real secret to his success. It's not about picking stocks at all. It's about something way, way deeper.
Okay, first things first. Let's just get the number out of the way. $160.2 billion. But look, that's not just some crazy number on a screen. It's the end result of a very specific playbook, a strategy that he's used to consistently crush the market for more than 50 years. And if you want to understand the man, you have to understand the playbook.
So how'd he do it? I mean, really? Is the guy some kind of wizard who can predict what the market's going to do next week? Is he just better at picking ticker symbols than anyone else on the planet? That's what a lot of people think, but the truth is, it's a lot more profound, and honestly, a lot more useful for the rest of us.
And this, right here, is the punchline. Straight from the man himself. This isn't just him being clever with words. This is a fundamental, game-changing shift in how you look at investing. See, a stock picker sweats over the daily price swings. A business picker, they're analyzing the long-term health and the real earning power of an actual company. And that one little distinction, it changes literally everything.
All right, so here's the game plan. We're going to break down this playbook piece by piece. We'll start with the absolute bedrock, value and safety. Then we'll get into how his strategy evolved and the real engine behind his success. We'll even see how it's being used today, and we'll wrap up with what is, without a doubt, the single most important investment any of us can ever make.
Okay, let's dive right into the foundation of his entire philosophy. These are the core principles he picked up from his mentor, the legendary Benjamin Graham. And this isn't about chasing hot trends or crypto fads. This is about timeless, rock-solid logic.
The most critical idea, the one you absolutely have to get, is the difference between price and value. Price is simple. It's what a stock costs right this second. It's that number blinking on your screen. But value? Value is what the business underneath it all is actually worth. Its assets, its brand, its ability to make money. Smart investors don't care about the blinking number. They live in that gap between what they pay and what they get.
And that idea naturally leads us to this concept, the margin of safety. It's so simple, but so powerful. All it means is you have to leave yourself room for error. You do that by buying a business for way less than you think it's actually worth. That way, if you messed up your analysis or if the economy takes a nosedive, you've got this built-in cushion that protects you from getting wiped out. And believe me, when you ignore this stuff, it can absolutely crush you. Just ask investor Gautam Baid. Early on, he got totally swept up in the 2008 hype, buying all these hot stocks without even glancing at their real value. The result? He lost up to 80% of his money. A brutal, painful lesson about something called recency bias. That dumb mistake we all make of thinking whatever's happening now will just keep happening forever. He learned the hard way that hype is not a strategy.
But Buffett's thinking didn't just stop there. It evolved, thanks in a huge way to his legendary partner, Charlie Munger, who really pushed him to think beyond just finding a cheap deal.
And this was a game-changing shift. Graham's original approach, they called it cigar butt investing. The idea was like finding an old, soggy cigar on the street with one free puff left in it. Sure, it was free, but it wasn't exactly a great cigar. Munger convinced Buffett that it's so much better to buy a wonderful company at a fair price. And why is that? Because a wonderful business just keeps growing and growing year after year. It does the heavy lifting for you.
So what makes a company wonderful? Well, Buffett calls it an economic moat. Think of a castle with a huge moat around it. It's a durable advantage that protects the business from competitors. This could be anything, an iconic brand like Coca-Cola that everyone knows and trusts, or a powerful network effect where the more people use it, the better it gets. A wide moat is what lets a company not just survive, but thrive for decades.
Okay, so we've talked about what to buy. But honestly, the real secret sauce, the engine that built this whole fortune, it's what he does after he buys. He holds on. He lets things grow. He unleashes the incredible power of compounding.
You know, the crazy thing is, compounding isn't just about money. Not at all. It's really a way of life. Every book you read adds to the last one. Every good habit you build makes the next one a little easier. It's all about these small, consistent efforts that, over time, lead to these massive, exponential results. Your knowledge, your relationships, they compound just like your bank account does.
And Got 'em By's story is just a perfect example of this. I mean, this guy was working brutal graveyard shifts at a hotel, and he used every single quiet moment to just read and learn. He applied for over 1,300 jobs and got rejected from every single one. But he didn't quit. That knowledge he was building up, it was compounding. And when he finally got a shot at a big interview, he was ready. He didn't just get a job. He absolutely nailed a senior role, all because of that relentless compounded learning.
Okay, so you might be thinking, great, that's all old school stuff. But nope, these ideas are more alive and kicking than ever. Let's just take a quick look at how this playbook is being used right now in one of the fastest growing economies on the planet.
Get this. Just think about this for a second. In India, over the last 10 years, 1 out of every 5 of their top 500 companies delivered a 1,000% return. A 10-bagger, as they call it. That kind of widespread success just goes to show you the incredible potential there is for this kind of business picking when you're in the right market.
And a big reason for that is what we're looking at here. The US market has gotten really concentrated. I mean, a tiny handful of giant tech companies are driving almost all of the returns. But a market like India, it's broad. There are hundreds and hundreds of potential opportunities. It's a true business picker's paradise, where you can actually go out and apply these principles, hunt for those economic moats, and demand a margin of safety across a huge field of growing companies.
So, we've covered a lot of ground. Businesses, markets, billions of dollars. But the single most important place to use these ideas, well, has nothing to do with Wall Street. It has everything to do with you.
And this really gets to the heart of it all. The real payoff from adopting this mindset isn't just about the money. The true joys of compounding, as Bhavin calls them, are found in the knowledge you build, the skills you develop, and the relationships you nurture. At the end of the day, those are the assets that pay out the biggest dividends over a lifetime.
Which brings us full circle, right back to the Oracle himself. Ultimately, this entire brilliant playbook boils down to this one simple, powerful idea. Your knowledge, your skills, your character, that's your greatest asset. It's the one thing that no market crash, no recession, no one can ever take away from you. So the real question isn't just which stocks to pick. It's what are you doing today to invest in yourself?